A sizable chunk of the world is still learning how owning, trading, and tracking cryptocurrencies will work for buyers, sellers, and regulators in a primarily unregulated financial industry segment. Amidst this, FTX, or Future Exchange, was one of the leading exchanges for digital trading assets. People praise the business for being one of the most transparent cryptocurrency enterprises. But when it filed for bankruptcy recently, without a doubt, we follow the news. The biggest question the entire facade raised was, what will happen with creditors of FTX? If you get an answer by the end of this video, make sure to let us know by liking, sharing, and subscribing to Coin Engine. Let's start by asking what happened to FTX when it declared bankruptcy. The exchange and the nearby companies started to collapse quickly in early November 2022. The Bahamas-based FTX and its subsidiaries have various funding models but similar management teams. For U.S. citizens, trading was only offered by FTX of the USA. SBF handed in his notice of resignation as CEO on November 11, 2022, the same day FTX filed for Chapter 11 bankruptcy protection. According to its bankruptcy declaration, FTX, which formerly had a market value of $32 billion and owes $8 billion in liabilities, may have up to 1 million creditors. Following were numerous investigations and legal actions. Regulators looked into whether FTX used customer funds to promote Alameda Research, another SBF trading company formed and almost entirely owned by the latter. In an interview with the New York Times, Sam said he had no knowledge of the sum Alameda borrowed from FTX after he resigned. The market first attributed the FTX implosion to a conventional bank run on the exchange's reserves. However, as time has passed and more details have emerged, the company's story has become significantly more complicated and possibly illegal. In November, FTX fell even further within 10 days. The exchange experienced a liquidity problem following a study that suggested possible leverage and solvency issues. Its attempts to negotiate a bailout with rival Binance quickly fell through. It was claimed that the FTX never held a board meeting and that some inexperienced teenagers were in charge of its daily operations. They frequently responded to crucial financial choices with emojis and had no accounting system. They also needed to determine how much money they had at any given time or where their money was going. The regulators have severe concerns about why it wasn't being disregarded in light of this. Sam Bankman-Fried and his family still own millions from real estate, which might be bought with the stolen money. This is even though billions of investors' dollars have been lost. On November 16, Sam was named in a class action lawsuit in a federal court in Florida for creating a fraudulent cryptocurrency scheme meant to take advantage of uneducated investors across the country. The failure of FTX rocked the shaky cryptocurrency market, which lost billions of dollars in value and plummeted below $1 trillion. Larry David, Naomi Osaka, Steph Curry, Shaquille O'Neal, Shohei Ohtani, Kevin O'Leary, and other well-known figures were reportedly involved in the case as persons who helped Fried carry out the plot. Genesis Global Capital, the Gemini cryptocurrency exchange, and BlockFi, a platform for crypto financing with substantial exposure to FTX, all got impacted by the FTX bankruptcy. The lending division of Bitcoin investment bank Genesis stopped accepting redemptions and issuing new loans due to FTX collapse on November 16. Genesis announced delays and withdrawals from its earned product after receiving the information. BlockFi appears to have stopped accepting withdrawals and is preparing to file for bankruptcy. The Securities Commission of the Bahamas seized control of the FTX's Bitcoin holdings on November 18. Precisely, trading in coin and token liquidity were encouraged by FTX. Users of FTX could exchange virtual money, carry out transactions, link their wallets, enter into derivative contracts, and buy or sell NFTs. U.S. cryptocurrency investors filed a complaint against the FTX developer and the celebrities who supported it. They claimed they used dishonest tactics to advertise digital currency accounts that paid a dividend called FTX. U.S. securities law forbids mixing customer funds with counterparty funds and trading them without express consent. The FTX platform did not permit trading by U.S. citizens. This was in response to the stringent regulation of the Bitcoin sector. The FDIC sent a cease and desist notice to FTX US in August 2022, saying the business may have broken the FDIC Act by making false and inaccurate assertions. The question raised in front of the creditors was, now, what will happen to us? The second largest cryptocurrency exchange in the world going under rocked the already unstable cryptocurrency market's fate. Additionally, Sam Bankman-Fried, the boss, resigned as a result. In a previous statement, FTX stated that it had started an assessment of its global assets and was getting ready to sell or reorganize some operations. According to the court filing, it's been claimed that FTX owes its 50 largest creditors over $3.1 billion. The troubled company has not named any of its top 10 creditors, but they are owed nearly $1.45 billion. The amount participants in the exchange will receive back after the bankruptcy procedures have yet to be discovered, but several analysts have cautioned that it might only represent a small portion of what they invested in the company. SBF expressed sorrow for declaring bankruptcy and claimed that by doing so, he had lost control over mostly financial issues. His contempt for finance regulators was clearly evident. It was immediately anticipated that the aftermath of FTX's rapid decline and collapse would hit other markets and negatively impact cryptocurrencies. Headlines coming up each day since the bankruptcy of FTX is turning the anticipation into truth. Anyways, what do you think about the entire facade? Tell us in the comments and help us out by becoming a subscriber of Coin Engine.